Let me start with a brief overview of the company's business and will then take you through the financials. After that, we will be happy to take questions you have, if any. We are one of the manufacturers of dental materials, serving the global dental market with a wide range of dental materials used for the diagnosis, prevention, and treatment of dental conditions. We manufacture over 100 dental products which find application in various dentistry branches. The company has over 90 international dealers spread across almost all continents of the world, ranging from America, South America, Africa, and Asia. We have recently obtained US FDA approval for 5 products, and we are set to end. Made a strong start to the financial year 2022. For the half year ended September 30th, 2021, we reported revenue of 1,775, EBITDA of 764.77 lakhs, and profit after tax of rupees 535.31 lakhs. 535.31 lakhs. It's also heartening to note that our operating cash flow for half year stood at 410 and a cash of 0.54. With this, the PAT ratio of our company stood at 30.15% and EBITDA ratio of 43.08. As of September 30th, 2021, the net worth of the company stood at 5,076.28 lakhs. The return on capital employed for the first half year stood at 14.19% without annualization. Also, I would like to add that we are almost a debt-free company with a debt-equity ratio of 0.03. Coming to the dental industry, I would like to update you all that India has the second dentists in the world, with over 3 lakh dentists, 5,000 dental laboratories, and over 297 dental institutions, which makes the Indian dental market vast indeed. Further, market trends predict that India is all set to become the single largest country for dental products and materials. The global dental market has grown at a CAGR of 5% over the last 5 years, with the Asian and Indian markets showing the growth and 6.3% respectively. That concludes my opening remarks, and now I would request the moderator to please put the questions from the participants. Thank you very much.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Participants are requested to limit their questions to 2 per person during the initial round and may come back for follow-up questions afterwards. Thank you. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So our first question from Mr. Mukesh Savala from Swal Consultancy Services.
Yes, please.
Yes, congratulations on fairly good numbers in the difficult, challenging time. Can you hear me?
Yeah, we are hearing you. Please continue.
So, sir, my first question is, our plant is in Jammu. So I'm sure we must have set up our plant in Jammu due to some tax incentives or some sort of schemes by the state of Jammu and Kashmir. So if you can, guide us, what are the benefits of having our plant in Jammu? And as I noticed that in the current half year, the tax incidence has gone up. So what is the tax incidence likely to continue going forward? So if you can please guide us on that. And since we are hearing a lot of noise about violence in Kashmir and all, so are we facing any difficulties of such scenario in Jammu, or what is the thought process behind setting up all our plants in Jammu? That is my first question, sir.
First of all, I would like to inform you that this company is existing in Jammu and Kashmir for the last 21 years, and in these 21 years, we have never faced any violence or any, unpeaceful atmosphere in our place of working.
Very good.
Jammu, we are located in Jammu. Jammu is a very peaceful place. There is never been any occasion of violence in this city. Occasional incidents have happened, but that kind of incidents can happen anywhere in the country or even in the world. So that's not a disturbing factor at all. The company was set up 21 years back because at that time some of the raw materials were locally available, and the government of Jammu and Kashmir was offering us very good incentives. Other important things that consideration for setting up the factory was that the Jammu and Kashmir is providing the lowest power rate, and the cost of employment is also comparatively low.
Good.
So other incentives are also available. At that time also incentives are available. Even now the government is offering new incentives to the companies who are expanding, who are diversifying, and those companies who are setting up new facilities. So keeping all those incentives in mind, we have set up our facilities in Jammu, and our new expansion and diversification project is also going on in the place, because we are entitled for certain incentives. And those incentives will definitely improve the profitability and improve our bottom line. So we are here to take all the benefits and improve our profitability and margins. And we are not at all worried, or there is never been any concern about the violence or peace related issues in Jammu.
Great. So, sir, one thing is certain that management from Bombay to Jammu is also comfortable to you, I suppose.
See, definitely it is possible, but there is no need at the moment to shift the management from Jammu to Mumbai. It is the most peaceful place, and the cost of, operational costs are very low here. So we have to take the maximum benefit of our and operational cost benefit. We have to consider while setting up the facilities here. So there is no point, and there is no plan to move the management from Jammu to any other place.
Okay. And sir, the secondly about incidents, we were in around 20% tax rate in the last year, which has shoot up to 26% in the current half year. So what is the rate likely to remain in time to come?
For this, I will request our financial advisor, Mr. Vinay Jamwal, to answer this question. Mr. Jamwal, please answer this question.
Good afternoon, everyone.
Good afternoon.
The profitability is on a increasing trend, and as far as the rate of income tax is concerned, this company have a reduction in the Section 80IB of the Income Tax Act.
Correct.
And for that year, for the last year, it has the last 10th financial year, for availing that incentive, and now after absorbing the incentive for the last 10 years, now we are paying the whole rate tax at the whole rate. That is 25% plus 7% surcharge and 4% education fee.
So that means effectively, henceforth, we will be having the same tax rate. And how about expansion that we are carrying out? Will that also qualify for 80IBA?
See, for 80IB, that will not qualify. There is no deduction right now under industrial undertaking incentives in the almost in the J&K state. And as far as the other incentives are concerned, we have a lot more incentives from the state government and the central government that has been announced in the J&K Industrial Policy 2020. That has already been discussed by Mr. Modi. As far as the income tax is concerned, we are going to pay the tax at the normal rates applicable to the rest of India.
Perfect. And my second question, sir, we have recently got our plant approved under US FDA norms. So you said about 5 products are approved. You may please guide us whether we have started supplying those products to any of the customers in North America and Canada, or those things are still under negotiation or pipeline?
I will reply to this question. These 5 products have been cleared by US FDA. And we have started the process of identifying the customers for these products. We are in discussion with many customers.
Hello.
Ladies and gentlemen, please stay connected while we connect the management team back on the call. Ladies and gentlemen, we welcome Atul sir back on the call. Atul sir?
Hello. Yes, please. So there are many. We are discussing with many customers in US, and because this is a process, we cannot just start selling the products in US. The products have to be evaluated by the customers and the users in USA. This process is going on. We have already identified and we have supplied some samples. That process is being carried out. So we are waiting for the evaluation reports and the feedback from the customers, because these are the dental materials which are going to be used on the human body. The US FDA is cleared, but now the customers also want to evaluate the products, and after evaluation, they will start this ordering process. So we are very confident that very soon the orders will start coming, and these 5 products, and after these 5 products, we have already applied for approval for another set of 15 products.
Okay.
So we are very confident in the coming months our products will be approved by the customers, and we will start this process of selling, and this will add to our revenue generation in the next financial year. So the effect will come in the next financial year.
Next financial year. Okay. Yes, sir, and just a small last question. We started by our operations since about 1999, and at present we have a 0.5% of our market share in India. So, sir, what is our internal target to reach for market share in another 3 years to come?
Now the company is having a good market position, because our direct competition is with the multinational companies. We don't have much competition from the domestic companies, because our domestic having very insignificant, performance, and their product range is not comparable with the product range what we have. And as far as the quality is concerned, we have got the best quality certifications. We have qualified for export to Europe. We have qualified for export to Saudi Arabia. We have got products approved by US FDA. So we are very confident our business will grow in the Indian market at a much faster pace in the coming years. And we are expecting, even during the pandemic in the last 2 years, in spite of pandemic and in spite of the hard conditions, our business is continually growing at the rate of more than 20%. So we are very confident in the normal situation. Our business will grow much faster and we will have better revenue. Top line will definitely go up in this financial year and in the coming years. So we are very confident our business will grow from 0.5% of market share to a better market share because, the maximum of the market share is taken by the multinational companies who have a history of more than 100 years. So we are competing directly with the multinational companies. Now we are growing at a much faster pace in India. So we are very confident that our market share will increase in the coming years.
But at least can we have some range kind of our expectation or our targets, internal targets for 5 years down the line, 3 years down the line?
See, we have already given a projection that we should reach to a turnover revenue generation of over 100 crores in the next 3-4 years.
Okay. Fine. Thank you so much. All the very best. And I have a couple of other questions, so I'll rejoin the queue. Thank you.
Anytime, sir. Thank you so much.
Thank you, sir. Our next question from Mr. Satvik Jain from Generational Capital. Please go ahead, sir.
Yeah, is my voice audible?
Yes, please.
Yeah. So first of all, heartiest congratulations on the great IPO and being, transparent since your first quarterly result also. So my first question was regarding the IPO proceeds. So I see, there would be, so before the IPO, we had around 8 crore of gross block and the revenue from that were 27 crores approximately. So now the expansion plan is of 35 crores. So is it safe to assume we will do a 3x asset turnover, ballpark 100 crore revenue from this new capex which we are doing? And what would be the timeline for that?
I think Mr. Jamwal will give the reply to this query. Mr. Jamwal, are you there? Hello?
One moment, sir.
Am I audible?
You're audible.
Hello?
Sir, you're audible.
Yeah, you're audible.
Okay. Good evening once again to all of you. The question was regarding asset turnover ratio. Right now, initially we have a turnover of 29.5 CR with an asset WD of asset is not 5.5 plus CR. Then now for the current financial year 2021-22, we are expecting a turnover of say 40 CR, and with the addition in the capital, with the addition in the fixed assets in the form of addition in building, plant and machinery and all other assets, we are expecting a addition in the fixed assets to a total of 10 plus CR of turnover addition fixed assets. With that, the total investment in fixed assets will be 16 CR. And if you compare this with the expected turnover revenue of 40 CR, the turnover ratio, asset turnover ratio will come around 2.48. And in the moving forward for 22-23 up to 25-26, the turnover, asset turnover will increase from 2.48 to 3.57 in the coming years till 25-26.
Perfect. That was very helpful. And the second question was, so since you are around 67 years old, so were there any plans for nurturing the next line of management, and if say Niharika Modi was involved in the company, so we can see further say 5-10 years down the line?
Definitely Niharika Modi will take over at an appropriate time. At the moment we are managing the business successfully. She is being groomed and she is getting professional experience. And once the time comes, she will take over. She has experience and she can easily take over the management. At the same time, we are converting our company into a professionally managed company. we are employing more professionals as a part of the top management team and also middle level management. So that process is also going on, employing talented new talent and experienced management team. So we are very confident that down the line Niharika will take over, and with a full support from the management team. So we are creating a professional management team that will take over the business forward. So this is our plan, and everything has been, internally, every arrangement has been finalized, and we are going to induct Niharika at an appropriate time.
So that was very helpful. If I could just squeeze in one more question. So this was just a bookkeeping question. So despite being a profitable company, I might have missed out any CSR expenditure which would have been done. Because normally 2% is mandated as a CSR expenditure, and there was a CSR committee also formed. And the other thing was every year there are around last year there were around 3.6 crore debtors of more than 6 months, but we are not provisioning for any debtors.
Mr. Jawal, please give reply.
Yes, as well as first query is concerned, the first part of this query is concerned regarding the CSR. We have made the provision, and we have also expensed towards the CSR based upon our net profits for the last 3 years. And as far as the second query is concerned, am I audible?
Yes.
Okay. As far as CSR is concerned, we have made the provision and also made the expenditure with respect to that expenditure, and which is based upon 2% of the last 3 average net profits of the company.
Okay. And the second question was regarding the debtors of more than 6 months. So I couldn't find any provisioning for that.
Regarding debtors. Trade receivables. Yes, okay.
Yeah, right.
As far as the debtors are concerned, we have a network of our our promoter, sale promotion agents. We have agents all over the country, and we are also selling the products internationally also. As far as international buyers are concerned, the payments are very prompt, but now we are also, for the last, say, 2 to 3 years, the management has come up with a policy to penetrate into the national market also. And so if you go by the financial for the last couple of years, you will see that the percentage of the national turnover has increased. And so since we are penetrating with the new products, and the company hasn't ventured into that area, we have to give a little cushion for the realization. And in the coming times, we are very sure that this debtors collection period will decrease, and there is no debtor which can be considered as a bad debt. As and when we see this view very seriously, and you will find in our financial statements, you will consider that there is a probability of any bad debt. So we straight away go for that provision thereof. And as of now, we don't expect there is any bad debt that can be written off.
Perfect. That was very helpful. All the very best.
Thank you very much.
Thank you, sir. Our next question from Mr. Jayant Mamania from Care PMS. Please go ahead, sir.
My first question is regarding, I wanted to understand the context in which we say that we are leading Indian players in the dental product sector. If you consider the India's turnover for dental products is 5,000 crore, and if you consider global turnover, which is 1,50,000 crore, and ours is only 30 crores. So in what context we are saying that we are leading players? Just wanted to understand our focus area.
Okay. Leading in the sense that we are the only company in India which is manufacturing such a wide range of products, and the only company in India which has got all quality quality standards, fulfilling international quality standard. And ours is the only company in India which is in the and only in company for the dental materials who has got the maximum business revenue generation in India and outside India. We are not comparing ourselves with any multinational company. We are claiming to be the leading manufacturer among the Indian manufacturers. We are not claiming or competing or claiming or any kind of comparison with the multinational companies who are in India, who are holding the maximum business share from the Indian market, but they are not the manufacturers in India, they are the traders in India. So we cannot compare ourselves with those companies because they are doing trading in India. They are not doing any manufacturing in India. So as a manufacturer, we are the leading manufacturer. So we are claiming to be the India's only organized sector manufacturer, and we are the India's only leading manufacturer. So this is our claim. We are not claiming anything more than this.
Okay. So we are based out of, and we had a channel where of Denpro is not to the so would you like to comment on this?
So the voice is not clear. I could not hear your question, please.
I am based out of Mumbai, and we had a channel checks with 2-3 dentists where their feedback was that the quality of the product.
I'm sorry. Jayant sir, hi. I'm really sorry. Sir, we're not able to hear you very clearly.
Okay, I'll
Yes.
I'm
sorry, sir. It's not better.
Hello. Now? Hello. Hello. Is it clear now?
Yes,
please.
Is it clear?
Yes, sir.
Yeah. Sir, I am based out of Mumbai, and we had a channel checks with 2-3 dentists in Mumbai only. So their feedback was that the previous Denpro's quality is not up to the mark. So any comment from your side?
See, in India, there are more than 300 dental professionals. So we cannot say that all the dental professionals will like my product and they will say that previous products are good or bad. It will not say that products are good or bad. We have to obviously see that we are meeting the international quality standards and we are growing our business in India at a very good rate. And this all speaks that our products quality is good. If the quality is not good, the business cannot grow. And our business is growing. That's ample proof that our product quality is very good.
So our focus is in tier 2 and tier 3 towns, or we are focused on major cities also?
At the moment, our focus is on the major cities because the major cities are the maximum consumption of the product is there. But we are now penetrating in the tier 2 and tier 3 cities because, there is a small company, and a small company, we cannot match our resources with the multinational companies as far as marketing expenses is concerned. We have to manage our marketing with a meager resources. We cannot put all our money into the marketing, So within our resources, we are trying to expand and penetrate the market and grow as fast as possible. And, and we are quite confident that with our current rate of growth and the situation becoming normal, our business growth will be much faster because now our focus is on brand promotion because we have a very good product range. We have got a very good quality management system. We have a very good factory. Everything is in order. Now we need to focus on the brand promotion. brand building. So that is the focus now, and we are very confident that our business will grow in the Tier 2 and Tier 3 cities also. And we are, heavily investing on the marketing, building our marketing team, so that we can penetrate faster and reach to the dental professionals in the smaller towns also. So this is our plan. So brand promotion and growth is planned via, increasing our reach to the customers.
So you said
as far as product quality is concerned, I can only say that we have got all the best quality certification which every international company is having. We have got the same quality. So keeping that in mind, there should not be any doubt on the quality, but we cannot satisfy all the dentists. Maybe some dentists have a different opinion, and they are not. There are some other concerns. Sometimes, the dentist, he is not able to use the product properly. He will put the blame on the product quality. So there are different situations. So I don't want to, go deep into this subject of, complaints and quality related issues. I can only say that my business is growing, and I am satisfied with the kind of, market feedback we get from our customers. So there is nothing to worry about the quality of the product.
Yeah, that is useful. So what is our R&D staff strength and the spend?
At present, we have R&D staff. We have a very good level of R&D staff. They are PhD in bioceramics, PhD in chemistry, and PhD in dentistry. So that kind of staff we have employed. But as you know that we are building up a new state-of-the-art R&D center, for which we have taken money in the IPO. When that R&D center is ready, that will be a state-of-the-art R&D center, first of its kind R&D center for the dental industry. No Indian company has ever set up a dental research center, what we are going to do. So once the R&D center is ready, definitely we are going to employ more people and more qualified talent, so that we can develop innovative products for the dental applications for the coming years, for the future. So this is our plan. We have good dental R&D team at present.
Yeah. So how much we spend in H1, sir, on R&D?
Mr. Jawal, do you have the figures on the expenditure on R&D?
Sir, right now the expenditure that is being done on the R&D is only built to capital nature, and the expenditure that is on a routine basis, it is incommensurate with the earlier years. No major expenditure as such has been executed on the revenue side. Okay. The reason is that we are for the expansion and for the additional products, we are in the process of building up the capacity in the terms of coming up with a new building, and once the building work is complete, it is almost at the last verge of it. As and when complete, we will start the equipment, and the R&D expenditure will, on a regular basis, will also commence.
Okay. Sir, we have a research collaboration with prominent academic institutions for exchange of technical knowledge and conducting training and research. Sir, can you tell us how it works in terms of, say, patent or rights?
The new product which has the patent has been applied, and we are expecting the patent to be granted to us very soon. It is almost on the final stage of granting of the patent. So this kind of activity already we are doing. Research work is going on. A new product has been developed, and the patent has been applied. The 5 universities with which we have the research collaboration, they are supporting us in terms of product evaluations, product studies on the product, and testing of the product. So these things, we are taking the support from the universities. So we are submitting our samples to the universities. They are doing the evaluations, they are doing the testing, and then they give us their feedback. And that kind of support we are getting from the universities at present.
Okay. Thank you. That's all from me. All the best. Yeah.
Thank you so much.
Yeah.
Thank you, sir. The next question from Mr. Samir Palore from AUM Fund Advisors. Please go ahead, sir.
Yes, hi. Congratulations on a good set of numbers. Sir, if you can just give us some idea on a year-to-year basis, how does this 6 months compare to the last 6 months? Any seasonality in the business? And how you see the next 6 months for your business?
Mr. Jawal, please, you have the figures.
Yeah, I can comment on it. As far as the 6-month figures of the current year is concerned, we have already shared with all the investors that the revenue from operation for the first 6 years of current year is 17.75 crore. If you compare this revenue with the previous year, relevant corresponding period of 6 months, you might have gone that for these 6 months for the year 20, from April to September 2020, the period was covered with the COVID-19, and most of it, even at that point of time, our company was working, and at that point of time, the turnover was not up to that mark. It was ranging about 10 CR, and in the 10 or 11 CR of turnover, and the second half the turnover picked, and we achieved a turnover of 29.51 CR. And in the current financial year, for the first 6 months ending September 21, we have achieved a turnover of 17.75 CR, which has already been shared with the investors.
Okay, and this has nothing to do with any kind of seasonality in the business. It was just COVID last year, and you expect the growth to be sort of along the same lines as you've done in the first 6 months?
Yes.
We have, in spite of the COVID, there was a lockdown for some time. We covered up. After the lockdown, the business shot up. It grew very fast. And overall, the year end was with about 22% growth last financial year. This financial year also, our business is growing. And we have seen that there is a growth of about 20% in this fund. In spite of 2 months lockdown, the business has grown. And then in the next 6 months, September onward, we are expecting a much better growth, and we can close this year with a much better top line.
Okay. And so my next question was, you talked about USFDA approval for 5 of your products. So if you can just talk about what are your sort of specific targets for the US market with these 5 products, maybe in the next 6 months and then the next year as well.
The 5 products, we got the USFDA approval. After approval, we have started locating the buyers for our products in the US market, because there are a lot of business opportunities in US for our these 5 products. So we are in talk with many international US-based customers. We exhibited our products in the recently held exhibition in the Germany. There also we met many international US-based marketing companies. So they have shown keen interest to market our products in US, and we are looking for a good company who can do national level marketing, and we have shortlisted 3 companies, and we have submitted our samples to them. They are evaluating the samples, because it's a very long process. Sample evaluation it has to be used on the patient, and then it has to be observed about its effectiveness on the patient. So this is not a one-day job. So they are taking time to evaluate. Once the evaluation process is over, then the marketing activity will start. we are very confident that these products, these 5 products, and further products which we have already applied for US FDA clearance. Once we get the US FDA clearance for those products, all products have a very bright future in the US market. US market is a very high price market. We are expecting very, good revenue generation from the US market. But it will take some time to get the products approved. After approval, this process of marketing will start. So we are already, the work is going on. And we are very confident that our revenue will definitely, revenue growth will be there from the US in the next financial year. It will be reflected in the next financial year. So it need another 3 months time to get the products evaluated, approved, negotiations, and all, designing, packaging, design, everything has to be done. So next financial year, its effect will come in the growth, in the revenue.
Okay. Thank you for that.
Thank you.
Thank you, sir. The next question from Mr. Anshul Mittal from Care PMS. Please go ahead, sir.
Hello.
Hello.
Yes, so actually I wanted to ask, sir, what is the reason of this decline in utilization levels since last 2 years from 96% to 76%?
Declining?
Capacity utilization.
Declining capacity. Okay. The declining capacity, actually, the capacity is in total is in metric tons. High weight item.
Utilization.
Yeah. Capacity utilization has gone down. It has gone down because the products which were not in good demand but heavy weight in terms of in terms of weight. So we have discontinued the manufacturing of those products, and those products have been replaced by high value added products. So the product number has gone down because the products which were that we have discontinued, and those products have been replaced by high value products. So the capacity for those products has been, which was utilized for making those products is free now for utilizing, making the high value products. So that is why the capacity utilization is low, but the business volume, the value has gone up, because we have replaced those products with value-added products, so high-value products.
So, sir, did we face any inventory loss for those discontinued products?
No, because that was a planned move. So we planned in such a way that whatever inventory we had, we consumed everything over the last 2 years, and then we switched over to the high-value products, because, we have to see that we only produce those products which generate more revenue. Why do we waste the capacity in producing the products which are not generating adequate profits? So it is better we discontinue and make the products which are generating more profit. So that's a planned move. So this is just to utilize the capacity for making high value products.
Okay. And sir, I also wanted to know, sir. Hello.
Mr. Mittal, hi. I'm really sorry to interrupt, sir. If you don't mind coming back in the queue for more questions, sir.
Okay.
Thank you, Mr. Mittal. Sir, our next question from Mr. Bismith Nayak from RW Advisors. Please go ahead, sir.
Thank you, sir. So first is, in your DRHP, there is an item called freight income and other income, under other income. Would you please explain the nature of it?
Mr. Jawal, please take this question.
Yes, I'll explain it. Freight income that has been included as a revenue to the company is that freight which we charge from our buyer. That is included in the invoice itself. So it has been differentiated from the sale to show the correct picture, and it's a better presentation sort of that anybody who is going to the financial, using our financial as a public document should understand the basic ingredients, what are the composition of the revenue. So sales have been differentiated, the freight income has been shown as an additional, you can say it's shown separately to the users of the financial statements.
If we ship a product worth 100 rupees and it costs us, let's say, 10 rupees, we are basically taking it from them and showing it as under other income. Is that correct?
Mr. Jawal, I'll give one example. Supposing because when we make the performance invoice, we charge certain amount of freight from the customer, and everything is prepaid. Now, for example, the customer pays us 10 rupees for the freight cost, and by negotiating with these freight forwarding companies, airlines and shipping companies, we negotiate with them for 9 rupees. So 1 rupee profit that we generate from the freight, so that is the freight income. I think, Mr. Jawal,
I just want to add one more thing to it, sir. Am I audible now?
Yes. Yeah.
So what Mr. Modi has told you, it's perfectly okay. But just one additional amendment is that this is not netting of the freight. This is basically a gross freight that has been received from the buyer. And what actually we pay receipt that has been shown in the freight expenditure under head other expenditures. The reason of showing both the expenditure as well as the income on a gross basis, this is again for the better presentation and also from the GST point of view. We are showing both the income as well as expenditure on account of freight on gross basis.
Understood. So, but this has only come up post-COVID, right? Pre-COVID statements, correct me if I'm wrong, but they do not have this line item under other income. Were you showing it differently, or were you just netting it?
Yeah. So, somehow there might be chances that here we have shown the freight on net basis. At that point of time, then the net expenditure should have been shown. But now we have made a consistent policy that is consistent on these lines of showing this both expenditure and income on a gross basis.
Okay. And one more on this financial statements only. So the revised salary of 12 lakh per month is being paid out to Atul and Namrata ma'am right now from April of this year, correct?
Yes.
Okay. And post opening up, I think we have for the last 1 to 2 years, we have seen benefits from reduced exhibition and transport expenses, etc. So,
yes.
As and when that comes back, what kind of margin maintenance, anything that you can throw some light on?
Yes. For the Mr. Motik, you want to answer? I continue.
No, please go ahead.
Okay. No, you carry with respect to the remuneration to the directors, and that has already been replied. And second is with respect to your expenditure on exhibition and exhibition expenditures. So as far as we have a market which is expanded in the almost in the India as well as the Western countries. So during COVID, all the exhibitions that were supposed to be attended by the promoters and the technicals of the company could not happen due to COVID. So the expenditure on that account was very low. That was only possible, the expenditure that were incurred on account of a national exhibition. And there could be that was 100% around national level exhibition. So we cannot basically correlate the reduction of expenditure exhibition to the increase of remuneration of the directors. Since we are for the last 3 to 4 years, we are constantly increasing the remuneration of the director promoters due to the reason that they are the person who are managing the company from the very inception, and they are into the technicalities of the company in terms of research and development, in terms of innovating new products, going for the marketing. Everything is being under the control of these two people. This is the basic reason why it is being done. And this question basically was also asked by the income tax department during scrutiny proceedings, and we also they were also satisfied with the commensurate increase in salary with respect to the work that they are doing for the benefit of the company.
So, considering your response to the tax rate, sustainable tax rate of the first question, the current tax margin for H1 FY22 can be maintained, or should we see some decline over the next 2 to 3 years basis?
On which aspect?
Tax margin or pre-tax margin, PBT.
PBT margin, if you go by the half-yearly results and you compare with the previous corresponding year, the previous year itself, there is a substantial increase in the PBT as well as the PAT. And we basically have during this year, PBT is for the 6 months 43.08%, and PBT has also increased to 35%. If we compare with the last year, and now the PBT is 35% for the first 6 months, and with the for the next 6 months, we are expecting on the same line.
Okay. And Mr. Modi, just one clarification. So,
Yes,
correct me if I'm understanding it wrong. Correct me if I'm wrong. So we do R&D, we develop our new products, we own the chemistry, and then we create some sample, produce sample, and give it out to dental schools. They come back with feedback, then we apply for patents and everything. Is that correct?
Yes.
Is that okay?
So what all products are not. Yes. Please carry on.
Please. No, that was your turn. Yeah, please.
See, all products are not patentable. It's not that everything which we make is patented. There's only one product for which we have applied for the patent. There are many products which are the products many companies are making, which we were not making earlier, and we are now developing. Those are not some new innovative products. Those are the products which are used by dental professionals for many years, but our company was not into the manufacturing of those products for the lack of the technical know-how. So, we have developed those products. Whenever we develop a new product, it's not a new product, it's a new product for our company, but not a new product for the market. So when we develop a product, we have to get the product evaluated and tested by some institutions. And first we do the testing in our factory, and once we are satisfied that this product will perform very well, then we give it to the different universities, and we get their feedback. And once they are satisfied, and when their reports are perfectly all right, then we make the start the commercial production of those products. But now our company has, because we are now expanding and we are now going for a new R&D center, we have employed technical people to carry on the research. So we are now focusing on the new innovative products which can be patented, which will be the first time, manufactured in India or anywhere in the world. So now we are identifying those products, and one product which was identified 1 year back and developed, it has been successfully developed and approved, tested and approved, and now we have applied for the patent of that product. Once the patent is granted, then the commercial production will start, and then that product is a very high value added, because that's the first time some company will be launching that product in the market. So our focus is now on shifting from the conventional products to the innovative new products. So this is our growth plan. That is why we are focusing on research and development activity, that we should have an independent state-of-the-art research center, fully equipped, and so that we can develop more innovative new products which can, really drive the company in a very faster speed. So if we continue to make the conventional products, then, the profitability is still we can maintain the same level of profitability what we are maintaining at present. But we want to increase our profitability. We want to grow faster. So for that, we have to develop new innovative products, for which we are going to set up a good R&D center. And already we have employed people started working with our existing infrastructure, and the products which two products have been developed. One has already been applied for patenting, and the other product the patent writing is going on. So this is our present R&D activity. We are developing conventional products also, and we are also developing new products so that we can have more product range and new products, first time manufactured products, and the conventional products which other international companies are manufacturing, but we are not manufacturing, or nobody is manufacturing in India. So we are having, that kind of growth policy and R&D plan.
Okay, so one last question. So did I get it clear? We are expecting 40 crore of revenue for FY22, and what would be our Northeast, West, South mix for India?
Sorry, I couldn't get you. 40 crore is okay because already we have achieved 17 point something in the first half. So we are very confident that we lost 2 months in the first half, first 6 months, 2 months we lost due to COVID lockdown. And in spite of that, we have reached to 17.5. So with next 6 months growth, we can easily cross 40. That is our target for this financial year. And other than that, what was your query?
Northeast, West, South distribution mix for India.
See, our business, we are making all-out efforts. We have not identified any particular area for growth. We want to grow in all North, West, South, East. Definitely, our presence is a bit less in the East, and we will be focusing on the eastern part. But we want it all-round growth, balanced growth all over India. So we are employing more people for the marketing team. We are increasing our sales force so that we can reach out to all the corners of the country. And we are also trying to be more active on the social media so that we can reach out to the dentists and through our brand building. So that's the focus for marketing.
Okay. Thank you.
Thank you very much.
Thank you, sir. The next question from Mr. Aman Vij from Astute Investments. Please go ahead, sir.
Good evening, sir. My first question is on the mix of products. So when we reach, say, 100 crore sales in the next 3 to 4 years, so basically what kind of domestic sales versus export sales we can see, as well as what can be the contribution from US and Canada?
See, at present and for the many last 5 years, we have maintained a balance of 60% export and 40% domestic. We want to continue our growth plan for the export as well as domestic, because we cannot ignore the export market. The prices are better in the export market, revenue generation, and the profitability and the value addition is more in the export. So that is again a thrust area for us. We have to see all-round growth. We have to expand our business in the international market. We have to expand our business in the domestic market. With all efforts, we have seen that our business is continuously growing in the international market, also above 20%. Indian market also it is above 20%. We are expecting that the business should. So, like that, we are quite confident that we will be able to maintain 60-40 ratio, because this kind of business model is very good for our company, the 60% revenue is coming from the export and 40% from the domestic, and 60% we get a better price. And because domestic market, because India is a very price sensitive market, so we have to have our prices a little lower than the international market. We'll keep export and domestic, and that model is very successful so far. And maintain our same ratio of 60-40%, 2% up and down, this side, that side. To continue with 60, growth has to continue in the export, growth has to continue in the domestic market. And our business is growing in this financial year also. We are growing very well and very well in the domestic market. New countries, we are adding new countries. Other than USA and Canada, our business is growing in the European countries. This year we have added, a new country in the Europe. So we are continuously, in the export market also we are adding new countries. Our existing customers, they are also growing at a better rate in this financial year. So they are also well settled with our products. They are our distributor for many years. They have established themselves. They have established the product in their countries. So the situation now is that the company has built its name, company has built its product range. Now the company has to only focus on the brand promotion and new product, innovative product development. So that's the our growth plan. We have to have this is the key growth drivers are going to be these are the key growth drivers. The new innovative products. US FDA approval, US market, international market, and growth in the domestic market, brand promotion. So we are going to focus on these activities.
So what can be the US and Canada sales out of the 60 crore export sales which we are targeting?
At the moment, we cannot give any figures because it's just the beginning. We are just doing we are just at the sampling stage. We got the approvals. Now after approval, we have customers. There are some of the customers are global customers. They have international marketing chains. So we are talking to them. We cannot just spell out any figures at the moment. It will take some time to consolidate, to understand the market and what kind of market response we get from the US market. US FDA has given the approval, but now the approval has to come from the customers or the users. So we are waiting for their feedback. Once we get a positive feedback, then we'll be able to figure out the numbers. And once we have shortlisted the suppliers, we have to have contracts with the suppliers. Once that stage comes, we'll be able to give some figures. Maybe another 3 months time. By the end of this financial year, many things will be clear, and those projections can be, discussed in the next financial year. That how much business is going to come from the US market, from the Canada, and from other new countries where we are going to start our business. At the present, we are talking that wherever we are selling with our 20, 25, 30% growth, we can reach to 100 crore level very safely with our diversified activities, existing products, and what we are making at present.
Sure, sir. Second question is on the domestic market. If you can talk about our reach in terms of how many dentists we are able to reach, what is our target, and also if you can explain, there are these big MNC players, Denpro and Vista. So how do we compete with these guys? Because their reach will be much more. Dentists will be more comfortable in recommending a MNC brand. So if you can talk these two things. First, what is our reach? That is
the reason that in spite of such a good product range, we still have such a low business from the Indian market because we are we are competing with the multinational Dent Supply and other companies who have more than 100 years of history and who are multinationals, they are big corporations. So we cannot match our resources with them. But as all those hurdles, those challenges, our business is growing in India while their business is not growing. They are doing, but their business is not growing in India. They are doing business. Maybe they have a growth of 2%, 3% annually, but our company has a growth of 25, more than 20%. So this speaks well about acceptability of the products. Dent Supply, if they're selling 100 crores, so maybe they will grow at a rate of 2% every year. But our company is a small company, so we are growing at a 25-30%. We are expecting a growth of more than 30% in this year. So see the kind of growth we have. But still we cannot match their business because they are into Indian market for ages. And their products are known worldwide. It is not only the quality which matters, it's the brand equity that matters. You buy a Mercedes, you buy a Tata. So people have a different, if I'm given the choice, I'll put my hand on Mercedes and not on Tata. This is kind of, feeling everyone has in India. Because everybody wants a German product, nobody wants Indian product. In spite of all those challenges, we are growing at a very good pace. Our growth is fantastic. We are growing at more than 25%. We are expecting growth of more than 30%. So this kind of growth is, a very satisfying growth for our company. And we are very confident that our growth journey will continue like this in the coming years also. It will be much faster.
One clarification, Dent Supply sales will be 1,000 crore, right? 20% of 5,000 crore in the market, if I'm not wrong. You were saying 100, so that's the reason.
See, I want to give one explanation to you. Dent Supply is not making the materials only; they sell the equipment also. See, we are only into the materials business. Dent Supply total business maybe 1,000 crore, but out of that, the materials business will not be more than 150 crores. 1,000 crore business is coming from materials and other things, which our company does not manufacture. We only manufacture the materials, consumables. So our comparison with Dent Supply is not at all justified. We have to see the only material manufacturing companies who are selling only materials. Dent Supply is let's say all multinational companies, they are trading companies in India. They are not manufacturing none of the companies is manufacturing any product in India, except a few companies. They are buying bulk and just doing the packing in India. They are not the real manufacturers. We don't call the repackers as a manufacturer. No company in India is manufacturing. So we are comparing us with the trading companies. I don't want, that kind of comparison. We have to have a comparison with the manufacturing companies. Dent Supply sells thousands items, they sell thousands items because they are sourcing products from various companies all over the world and they are selling. So manufactured items are not, we compare ourselves with the materials only. More than 150 crores.
So yeah, on material side specifically, so what is out of the 5,000 crore market, most of it will be equipment, if I'm not wrong. So what is the consumable market?
Consumable market will not be more than 1,500 crores. Maybe about 1,000 crores is the consumable. The material.
Who are the big players in material also will be the big MNCs?
See, all these companies, Dent Supply, Ivoclar, 3M. 3M is a very big company, but 3M is part of the dental material is very.
Atul sir? Ladies and gentlemen, please stay connected. Ladies and gentlemen, please stay connected while we connect Atul sir back on the call.
Hello.
Yes, Atul sir, you're connected to the call. Please go ahead, sir.
Okay. Okay. Hello.
You were explaining that, you were explaining the overall market consumable is 1,500 crores.
Yeah.
PM is small only because the
Yes.
distribution is small.
Out of 1,500, you see, that is the materials market. So every company in India is doing, trading with materials and equipment. So this is only selling materials. So we cannot take this as a figure for the comparison because they are selling equipment.
Sure, sir. In terms of final question, in terms of the reach, if you can talk about, this was earlier asked itself. Okay, what is our reach in terms of dentists and what is our targeted reach?
We are not dealing directly with the dentist. Our business is B2B. So we are dealing with the dealers, distributors. So every dealer, distributor has got in his own area, has got a reach of dental professionals, dentists. We do not have the exact number of the dentists which a dealer is having, in his range. So the exact number of the dentists we do not have because we are not directly dealing with them.
In terms of dealers, if you can talk about what is...
I'm really sorry to interrupt, Mr. Vij. It's due to time constraint, we would have to keep this question short.
No issue. Thank you.
Thank you, sir. Ladies and gentlemen, due to time constraint, that would be the last question for this call. I would now like to hand over the floor to Ms. Astha Jain from Hem Securities Limited for closing comments.
On behalf of Hem Securities Limited, I thank Prevest and the team for giving us a detailed insight on the results and the time we spent on this call. I would also like to thank all the participants for joining this call. It was an extremely fruitful discussion. Thank you all for being on the call. Now, I would like to hand over to the moderator.
Thank you, ma'am.